Hey, welcome to the Advanced Fibs Don't Lie video course. First and foremost, I want to congratulate everyone that has made it this far. I know that it takes a lot of hard work and dedication in order to study a course with a different strategy and being able to implement that on your own and making sure that that pattern resonates with your personality, whether you want to use it as a scalper, as a day trader, or even as a swing trader. So the first topic that I wanted to hit was the market environment, because mainly this is what's going to determine what kind of fib setup you will be using during that session or during that day. All right, so let's get straight to the point. The first and main environment will be the trending environment. Then you also have the range or high volatility environment, which is actually pretty rare, but I like to trade the range environment because it gives you an opportunity to go either short or long in the same day if you're taking multiple positions. And then you have consolidation or choppiness, which I highly suggest to stay away from the market during that day if you witness any consolidation, because at that point the market is just accumulating orders to take its original intended direction. And it is best to wait, sit out, and wait for the leg to break market structure or wait for the market to choose a direction before you even identify what direction is going to take, how to run your fibs, and then place your trade. All right, so whenever it comes to the trending market environment, you will see a lot of strength in one direction. A lot of the days you will see this um, market environment start ripping around the Asian session, and then it continues throughout the London and then throughout the New York session. So it's either going to be a very strong bullish move or a very strong bearish move. It is not good to counter trend trades during this market environment because you will not see many opportunities. And the last thing is that sometimes if you want to capture more than 40 or 50 or 60 pips during this trending environments, the best opportunities will start showing up between 3 and 5 a.m. Eastern time. I personally have not been trading London session in the past few months since my position size have been increasing drastically. And the bigger the position size I will be trading, the more cautious I will be in my trading, just because I want to make sure that all my confluences are aligning. And the New York session offers you the best opportunities because the trend is already has already unfolded. So since I already know what direction the market is taking, it is easier for me to identify where I'm going to draw my legs from for the fib setup and just wait for the retracement and continue on that direction. Then we also have the range environments. Neither buyers or sellers are in control. It is just trading in a range. One thing that we need to differentiate is whether it's a range or if it's just a choppy environment. And the difference is that a range is pretty wide and it offers you opportunities to go both short and long. Whenever it's actually choppy, you see a small range of, I would say, about 5 to 10 pips, and it's just ranging back and forth. And also, the range offers you opportunities to go long and short when the range is wide and when there is high volatility. And another tip, I actually didn't write it down, but it has to do with the size of the range. Usually when you have a normal size range, which I will say between 20 to 30 pips wide, this ranges, they either contract sometimes and they become very, very tight, or they actually expand before they start breaking and taking in its intended direction. And then you have consolidation or choppy days, which are the worst. The good thing about these days is that once you wake up in the morning and you look at the market, you know exactly whether you're going to be trading that day or you're not. And if you're a person that you trade during the Asian session, once you open your chart, same thing. You'll be able to determine whether you will not be trading that day or if you will be trading that day. And if you are going to be trading that day, whether it's a trending environment, a range environment, and which setup you will be applying that particular day. So now I want to go over the charts and just point out a couple of trending environments. So for example, here on Friday, we had a very, very bearish environment here. How I had actually mentioned on the tools and indicators video during the regular Fibs Don't Lie course, I mentioned how the mouth opening of the EMAs also identify the strength of the move that we're going to actually have following the next few candles. And if you notice here, this is very inclined to the bearish side. So this gives you a clear indication that we will see our EMAs crossing over and we will have a bearish move. So let's keep on following the chart in the previous days. And here again, you see the inclination of the mouth here. It is actually it is going up sharply, and it shows you that we will have a big push. And after this consolidation here, we're most likely going to see another measured move going to the upside. And in regards to the measured move, just to recap on that really quick, if you run your arrow from the bottom to the high of the move, now you copy, paste it. Now you paste it to the bottom of the move, which was the retracement, all the way to the top of the push, and that's where you're going to see the entire measured move. So keep in mind how measured moves work. They're very fun to use because you know exactly where is a possibility for you to take off all your positions when you're in the trade. So let's continue to go back. And here as well, you have a very strong bearish environment, and the day started off by having this bearish inclination here on the mouth of the EMAs. So those EMAs and that mouth opening, it actually makes it fairly easy for you to identify if we're going to have a trending day and we're going to wait for a retracement to take a trade, or if it's just going to be on a range or consolidating or choppy. All right, so let's go back now to range trading days. Now I have a few examples here. Took a couple of screenshots of some range trading days. Since they don't occur all the time, I just took some pictures to make things easier. And whenever you see a range, you will see a double bottom and you will see a double top. And with ranges, if you want to draw them like this with a shadow, or if you want to draw them with a channel, just to get the hang of it and see specifically if you are on a range or if you are on just a choppy environment, use the wicks on the channels and know that you want to have two bottoms and two tops, and that is considered a range. I will close that out. Second example, again here you have two bottoms and two tops, and the range was actually contracting, becoming tighter before ripping and continuing its intended direction. Let's look at the third one. Same thing here. This one was a wide one and it was turning into just a choppy day. So you see the double bottom, you see the double top right here, and it went from a range to just a choppy or a consolidation environment. And then you had to push again, testing out the lows for the third time. It rejected and it took its intended direction, which was bullish to begin with. Fourth example, and again, this is a very, very tight range. In this environment here, this was during the London session. If I was to see this here, I wouldn't want to trade it. Just sit back, wait for the New York session, see if New York gets any better. However, keep in mind that when a day starts off choppy, it will continue being choppy for the remainder of the day most of the time. Just as if it's a trending day, the market will continue to trend during the New York session and for the rest of the day. And if it's consolidating, it will consolidate for the rest of the day. So here, I will consider this a range because you have plenty of pips in between, and you have double bottom, double top. Then we have the leg here that broke market structure. So you were able to run your fibs here and see if you can spot a 62 short. In this case, it created a 38 short. So that means that you had a 62 short on the 5 minute, which this will be a topic for the next video on how to master the 5-minute chart setup that we use. So now let's go to the fifth example here, and same thing. You had a double bottom and you have a double top, and that is a specific range pattern that started consolidating before it took its intended direction. And I'm pretty sure this turned into a trending market environment right after. And the last one, again, double bottom, double tops. It turned into a range. It ran stops to the downside before taking its direction. And before I conclude the range market environment, I do also want to go over how to draw them. So let's go to the beginning of the week. Actually, last week right here, this was a perfect range environment here that we had last week for several days. So I'm going to start off by spotting the double bottom that we had here. We also had a bottom here. If you notice, they had a strong support on the 6,200 area. So I would draw the bottom from wherever you see most of the wicks touching. If you notice here, you pretty much see most of the wicks touching. It touched all the ones right there in the support area. And now for resistance, make sure that most of them touch, just right there. And that was a perfect range environment. One of the good things that I personally like about range environments is that you're able to spot a setup going either direction. For example, this market environment is bullish. However, there was a short setup right here. And then again, it turned into a bullish market environment. And then now we had a quick long going right here. So you had a short, then you had a long. It consolidated on the support area. It tried to aim for the highs for the third time. It tried to aim for the 6,500 area once, twice. The third time failed, so the trend shifted, since now the objective wasn't to break the 6,500. The objective was to break the support and continue to flush. So that is how I would suggest to draw your range trading environments. Go back up at least 6 months and just test it out. See how to draw it on a day-to-day basis. We will not be drawing this out. It's just the only reason why I want you guys to draw it is just to master this certain pattern and know when you have a range environment in front of you, whether it's trending or just consolidating. I know that it's very easy to spot the trend market environments. However, sometimes it can become quite challenging to identify if we are on a range or if we are just consolidating. So that's something very useful to keep a close eye on. So going back to a consolidation or choppy environments, just know that you need to stay away and wait for a significant market structure break. And this usually occurs on days with a lot of news. So prior to a lot of new major news releases, you will see the market consolidating, or you will even see large ranges. So if you see a range, you can take a trade going either or if it's consolidating, just step aside, wait for the news to be released, and then trade accordingly. How can I identify the environment? How inclined is the mouth of the EMA, which you could use as reference on the video number 6, which is the indicators and tools video that I just mentioned a few minutes ago. How can you identify if it's a trending environment or if it's on a range? Look at the mouth. How inclined is the mouth of our EMAs? Do you see them inclined like the previous examples that we just showed, or are they just flat and moving sideways? That is a good way to identify what kind of environment you're in, or what kind of environment we're going to be in the next couple of hours, especially if you're identifying the mouth of the EMAs on the 1 hour or the 4 hour chart. That is a good way to identify that. Or also, when you look at the strength meter, check out the pair that you're trading and the pair that you're trading against. What is the strength that you have? So I'll go over a quick example. So for example here, if you were trading the EJ pair, you see that the euro dollar has a lot of strength, but the yen has no strength at all. This is a good identification that the market environment for this particular pair, I would definitely be very, very bullish. So those are things also use to identify the environment. You have the mouth of the EMAs, you have the strength on the strength meter, and also do you see a lot of consecutive 38 bounces on the 5-minute chart and the 15-minute? So we can go ahead and see some examples. For example, right here, perfect. We had a big pivoting point. It tested the bottoms. It couldn't break market structure to the downside. So the current momentum was temporarily bullish. And what we see here is a 38 bounce. We see a 38 bounce, so that identifies that this is a temporary bullish environment, and we're also trending to the bullish side. Let's keep going back. Here again. All right, so if you notice here as well, you had a lot of strength to the downside and you saw a 38 bounce. That is a good indication that we are temporarily bearish, and we will probably remain bearish for the remainder of the session or the day. And the same thing whenever there's a bullish environment. It will remain bullish for the remainder of the session or the day. So I think that should be good in regards to explaining the market environments and how to spot them. And now to the summary. I would like for everyone to go back at least 6 months on your chart and identify the trading environment for every session or day. Do some back testing with market replay in order to train your eye and quickly identify in which environment you are in. It is very important to know in which environment you're in, because you do not want to use a certain strategy for a trending environment and you're actually in a range environment. Be mindful to practice this on the higher time frames as well, because charts are fractals and it's always good to know what's going on today. But also if you look at the 4-hour, daily, or even weekly chart, you're able to identify in what kind of environment we are overall, and if we will remain in that environment for the foreseen future, for example, for the next 30 days, or if we will be in that environment for the next 3 to 6 months if you're looking at the weekly or monthly chart. So these are very good things to focus on and also master. In what kind of market environment have we been in the past month or the past year? These are good things to know because it doesn't apply to you as a day trader on a day-to-day basis. However, it is very useful to know because you know where you stand overall whenever it comes to your pair or your desired market instrument that you trade, if you trade crypto or equities or futures, etc. All right, if you guys have any questions, feel free to send me a DM or write to me on the community that we have now, and I'll be happy to respond and address any confusions that you guys might have.